All right, so what is Bitcoin and why does it matter? In today's video, I'm going to break down in simple terms how Bitcoin works, what problem it solves, and why it might be the solution to your money problems. Over the past 16 years, Bitcoin's price has gone from zero to over $84,000. It's been the best performing asset class since its inception in 2009. In fact, if you compare Bitcoin's adoption rate to that of the internet, it's growing even faster. But just like the internet in the 90s, most people don't understand what Bitcoin is and why they should care about it. Here's a clip from 1994 of what people sounded like when the internet was brand new.
Well, Allison should know. What do you
is
think about
internet
Allison?
anyway?
Internet is that
Massive computer
right,
network.
the one that's becoming really big now.
What do you mean? That's big. How does one? What do you write to it like mail?
No, a lot of people use it and communicate. I guess they can communicate with NBC writers and producers. Allison, can you explain what internet is?
And obviously that sounds ridiculous, right? Because most of us use the internet on a daily basis and we understand how it's completely transformed our lives. And today, I believe we're living through the same moment with Bitcoin.
About 5 years ago, we asked Charlie Munger, we were sitting right there, what he thought of Bitcoin, and he said, rat poison. Yeah. Back then, it was about $100+ per Bitcoin. Today, it's 9,000. Is it still rat poison?
Well, probably rat poison squared.
I just think the whole thing just is
Going to zero?
Going to zero and it's fake.
Bitcoin itself is a hyped up fraud. It's a pet rock.
You're back to somebody trying to create Bitcoin, which is there's nothing in the end. It's supposed to be purely self-fulfilling prophecy, purely levitating on itself.
There's still a broad misunderstanding of what Bitcoin is. And it's common that you see talking heads, famous investors, and people that run large institutions that have clearly not done their homework yet. But at the same time, I myself use Bitcoin. I know why it's useful, and I use it every single day. And I believe Bitcoin is following the same path that the internet did. One day, everyone will understand why it matters and why it's so important. But for you, today, it doesn't hurt to learn how it works before the rest of the world figures it out. Let's start with the basics. Before we talk about why Bitcoin matters, in simple terms, let's break down how it works. There's no banks, no CEO, and no one in charge. Yet it still works and runs every single day. At the center of Bitcoin is something called the blockchain. You can think of this as a massive global notebook that everyone has the same copy of all over the world. It records every transaction that's ever been made on the network. Every 10 minutes, a new page gets added with all of the latest transactions, and everyone all over the world has the same copy of it. No one can erase it and no one can fake it because everyone's looking at the same thing. When you own Bitcoin, your balance is recorded in the global notebook, except only you hold the key to move that notebook entry on the ledger, or in other words, transfer it to someone else. You can think about it like this. Your key that you own is the only thing that allows you to update where your Bitcoin is in the notebook. It proves that you own that line of Bitcoin, and only you can move it to a new line. No bank, no government, no company can do it for you. You hold the key. And if you don't share it, no one else can touch your Bitcoin. So who's actually writing in this notebook? Who's keeping everything updated and honest? Well, that's where miners come in. Every 10 minutes, computers all over the world called miners compete to solve a difficult math problem. The first one to solve it earns the right to add the next page of transactions to the notebook. When that happens, all the other notebooks in the network update their copy at the same time. This is how new transactions get recorded and how everyone else stays on the same page. And as a reward, the miner also earns some new Bitcoin. But here's the key. There's a hard limit. The notebook will only ever allow 21 million Bitcoin entries, no more ever. And this is the point where you might be asking yourself, if more miners are plugged into the network and there's more electricity being expended, couldn't you somehow increase that 21 million hard cap supply? This is where an important concept called the difficulty adjustment comes in. And how the difficulty adjustment works is it adjusts the difficulty of that math problem every 2 weeks based off of how many miners are coming in and out of the network and how much electricity is being expended towards solving this math problem all over the world. This ensures that regardless of how many miners are plugged in, every 10 minutes, the same amount of Bitcoin is issued as a reward. So miners do more than just create new Bitcoin. They're processing transactions, updating the notebook, and enforcing the rules without a central authority. Most money systems all over the world can change the rules pretty much whenever they want. And you usually don't find out about rule changes until after they happen. But Bitcoin works differently. Everyone who runs Bitcoin software is running the same notebook, and it comes preloaded with the exact same set of rules. And the most important rule, there will only ever be 21 million Bitcoin. That limit is coded in from the start. It's not up for debate. If someone tries to change the rules, maybe print more coins or rewrite the past, the network ignores them. They're out of sync. Their notebook doesn't match. And that's the power of decentralization. No one can rewrite the rules unless the entire world agrees. And because everyone wants a system they can trust, no one wants to change it. So, how does Bitcoin work? It's a shared notebook, a private key, a limited supply, and a rule book that no one, not even the most powerful government in the world, can change. Now, at this point, you're probably thinking, blockchain, mining, notebook, that's great, but what does this mean for me? I totally understand where you're coming from, because for me, at the start, when I first heard about Bitcoin, it seemed abstract and pointless. The key for me was when I started to understand what the problem Bitcoin was created to solve was. And on top of that, I also started to understand how flawed our traditional investment options are. Understanding this is the key to realizing that Bitcoin's abstract digital nature is actually a strength rather than a weakness. All right, now let's talk about the problem, because Bitcoin didn't just come out of nowhere. It was created to fix something that is deeply broken. Imagine you're saving water in a bucket, but no one tells you there's a hole in the bottom. That hole? It's called money printing, and every time the government prints more, the dollars you saved buy less, leaking the value of the dollar you hold and buying you less with that dollar over time. This is inflation. It slowly drains your wealth, and it's built into the system. The truth is, governments can't stop. They've borrowed too much, so they need to print more, which makes it harder for you to save in the dollars that you earn over time. It's a broken cycle, and Bitcoin, it's a way out. Bitcoin doesn't just patch the hole, it replaces the bucket with a brand new bucket designed to store water better than anything else we've ever seen before. Most people aren't saving in dollars anymore. We all know the dollar leaks, so we turn to other buckets to try to protect our savings. Stocks, bonds, and real estate. These are the tools we're told to use to store value. But the truth is that these buckets leak too. Each one comes with its own set of risks, costs, or weak spots. The key for me to understanding Bitcoin was really having a good understanding of how flawed the current investment options we have available to us today are. Next, let's talk about how Bitcoin fixes what's broken with your money. Most people already know that the dollar leaks. That's not new news. We feel it every time we go to the grocery store, or fill up at the gas pump, or pay rent. And that's why so many of us are told to invest our money instead. We'll start with stocks, and stocks have had good returns over the long run. You're betting on a basket of companies to do well over the long term, and historically that's worked out pretty well. But with stocks, there are still leaks. First, stocks are priced in dollars, which are losing value every year. So even if your portfolio goes up, your purchasing power might not. Second, companies can dilute your ownership by issuing more shares. Your slice of the pie shrinks without you doing anything. And third, the market's tied to speculation, debt cycles, and central bank decisions. A lot of the growth we see is fueled by money printing, not real productivity. Most of these companies are over-leveraged with debt. The second bucket is bonds, and bonds are supposed to be steady, safe, and predictable. However, in today's environment with high inflation, bonds are a problem because in real terms, you end up losing money. If the interest rate on the bond isn't higher than what the inflation rate is, you're losing value in real terms. You're locking money up for a small return while the cost of everything around you keeps going up. And here's the kicker. You're lending money to governments that are already buried in debt. The more they print to repay it, the less your bond is worth. The crazy part is that most governments will benefit from inflation because it just makes the debt easier to repay. Now, the third bucket is real estate, and real estate is tangible. You can live in it, you can fix it, you can physically touch it. And this is why people love it. However, real estate comes with its own set of leaks. There's property taxes, maintenance, insurance, realtor fees, and the bigger your property gets, the bigger your responsibilities. It's also not liquid. You can't sell a house in 5 seconds. You might not even be able to sell it in 5 months. And real estate is one of the most regulated assets you can own. Your upside is often capped by rules you don't control, otherwise known as jurisdictional risk. Another risk that is not talked about is natural disaster risk. We've seen this with tornadoes, hurricanes, and wildfires in the past couple years alone. And then There's Bitcoin. Only 21 million will ever exist. No company can dilute it. No government can inflate it. No central bank can bail it out. It's borderless, liquid, easy to store, easy to move, and then there are no property taxes or maintenance fees. Bitcoin was built to do one thing better than anything else: store value over time. And it does that by fixing what the other buckets can't. Now, this doesn't mean you have to go all in on Bitcoin and sell everything else you own. But if you're saving money for the long term, don't you want a bucket that doesn't leak? That's why Bitcoin has outperformed everything else. It wasn't built to leak. Bitcoin's killer app is that it makes you wealthy over a long period of time. And I don't say that to sound arrogant, but to simply point out that most people don't understand how much we've been stolen from, and they don't understand how much of an improvement Bitcoin is on traditional store value assets. So in conclusion, Bitcoin gives you a better type of bucket, one that holds value, plays fair, and doesn't depend on anyone else. It allows you to store your money in something that holds value over time better than anything else we've ever seen before. And in today's world, that's exactly what you need. My name is Austin. I'm here to help you think differently about your money. Thank you so much for watching, and I'll see you in the next video.